Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
We are watching Tesla. The stock surging the most, I should say, in more than 3.5 years. The car maker reported surprisingly strong earnings, gave a juiced up forecast for growth in vehicle sales next year. Tesla CEO Elon Musk highlighted it all on last night's earnings call.
I do want to give some rough estimate, which is I think it's 20 to 30% vehicle growth next year. Notwithstanding negative external events.
All right, so an upbeat outlook, some caveats, if you will. That was Elon Musk on last night's earnings call. Keep in mind, while the stock is soaring today, as we said, it's up about 20%. It is still 37% lower from its high back in November of 2021.
With more on how Tesla is doing with us, we've got a Bloomberg News Global Autos editor, Craig Trudell, joining us from London. Craig, before the call last night at 5:30 New York time, Tesla shares were up just about 8%. What specifically did investors hear on the call that caused shares to move higher in today's trade?
I mean, Musk was in sort of rare form. I think, you often can sort of can count on him being quite positive. And, sometimes he gives people reasons to bid the stock up. Other times, he's less careful. I think last night he wasn't necessarily careful. He at one point said something about, I'm going to take a risk and offer, this upbeat outlook for next year. As we heard in the clip that you just played, I mean, he also, sort of couched this. Later on, he talked about, his forecast for how many cyber cabs they'll make, a couple years out as just his best guesses. So, that being said, there was a lot to like about this quarter in terms of, sort of the breadth of what went well. I think expectations were quite low in terms of what revenue and earnings were going to be. And they beat expectations on a lot of metrics, and it was kind of widespread. It wasn't just the car business. They're doing well on the energy side as well.
Well, that's what I wondered, Craig, is this a report where we were all managed so well going into it and had very low expectations? And so when Tesla comes in stronger than forecast and above those low expectations, we were all just like, whoa, really surprised? Or is this a report where Tesla, the business, is actually doing well?
I think it's a little bit of all the above. I mean, is it a 21% move up in the shares sort of report? I'm shocked by this, but what do I know? I'm just a journalist. So I think it is the case that the stock has gotten roughed up a little bit the last couple of weeks since the robo-taxi unveiling. I think there was really high expectations going into that because Musk had sort of spent months hyping up all the work that they've done on AI and years now on self-driving. And we don't actually have, necessarily clear indications that, some of the promises he's made or predictions that he's made are close. You don't have to look very far to see, people who use the product that the company calls full self-driving, acting up, not working so well. They recognized some revenue this past quarter from deferred revenue related to that business. And, one of the features that they rolled out, actually Smart Summon, which is an interesting acronym, we're seeing reports of people trying to summon their cars in parking lots and getting into scrapes. And so, there's still, a lot left to be said about, just how much longer this company, needs to work on this technology to get it to where it's safe.
Hey, Craig, there were a lot of questions ahead of the earnings call yesterday about whether or not analysts would ask any questions related to Elon Musk's political activities, the $75 million he's given to the America PAC in support of former President Donald Trump during this election cycle. What did we hear from Musk on the call about a potential second Trump administration? How did he weigh in on politics?
Yeah, it was interesting. I think, Tesla solicits investor questions, going into these calls, and there were a lot of questions submitted having to do with politics and investors wanting to, hear Musk address, his support for Trump and just how outspoken he's been. He didn't utter Trump's name once, which was a little surprising to me, but he did allude to this idea of, maybe if he were to be appointed the head of the government efficiency department that he and Trump talked about on X a while back, maybe he would work on national rules for getting robo-taxis on the road. So he sort of gave investors a little bit of a taste of how he would, potentially be able to tip the scales after becoming such a huge benefactor of Donald Trump.
Investors who wanted something today got better than expected profit and guidance for growth on deliveries. That was from Gene Munster over at Deepwater Asset Management. He said the long-term investors got the golden carrot. So is it the golden carrot on the delivery numbers? Is that what it is?
I think that was a big one. I mean, there's I think real legitimate concern as to whether or not the company will deliver more cars this year than it did last year. Through the first 3 quarters of the year, that deliveries are down, and they're going to need a real substantial jump in the fourth quarter to get to where they're positive. I think the company surprised people by saying they do expect some slight growth for this year, so they're really going to have to finish strong. And then 20 to 30%, I think, that sounds great. I didn't necessarily get, a strong sense of how exactly this company is going to pull that off because they have not specified what sort of product is coming that could possibly, pace that.
What about the more affordable car that was promised in what was the first half of 2025?
Didn't he kind of say something about that?
He's alluded generally to new vehicles, including more affordable models, but what those models are, we have no idea. It's not going to be a $25,000 Tesla with a steering wheel and pedals, because he was very dismissive of a question posed about that. So, I think it's pretty clear at this point they're going to refresh the Model Y and maybe offer some cheaper versions of the Model Y and the Model 3, and are counting on getting growth going again.
And we know, Carol, that steering wheels and pedals are not the future for Tesla.
So I hear. I'm thinking it's a cheaper Cybertruck. Like maybe you get a discounted version. I don't know.
That's definitely coming too. It's got to. Yeah.
Good stuff. Craig Trudell, thank you so much. Global Autos editor at Bloomberg News, joining us from our bureau in London.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
And right now we want to get a little bit deeper into what's going on in the United States. And this, Tim, as we've seen U.S. Treasury yields risen along with the odds of a Republican sweep at the November federal elections, which could mean deficit-funded growth and tariff-stoking inflation. It's something that Geeta Gopinath just talked about, that the importance of U.S. debt, it's sustainable, but she also said that that we should have less and that we need to be kind of ready for the next crisis when the government might need to take on more debt.
Okay, this is something on our next guest's radar, certainly. With a look at the U.S. economy, joining us here in our studio, we got Olu Omodunbi, chief economist over at Huntington Private Bank. It's a division of the publicly held Huntington Bank shares based over in Ohio. The bank has more than a $22 billion market cap. It's up 22% so far this year. Olu, welcome to Bloomberg. Good to have you with us. I just want to get right into it and talk politics. Are you guys at the bank setting up for a Harris win or a Trump win?
Thanks for having me. So, election is top of the mind for many businesses, consumers, investors. But we tell clients to focus on policies, not politics. So monetary policy, for example, what's the Fed going to do? We expect the Fed to cut the Fed's funds rate by 25 basis points at each of its meetings over the next couple of months. And we also expect about 4 cuts in 2025, which will be a boost to consumers and the broader economy.
Olu, let's stay with that. Policies get you. But if it's a Harris in the White House or it's a Trump in the White House, those policies could be dramatically different. And when it comes to the Federal Reserve, we've heard from former President Donald Trump talking about potentially interfering in what the Fed might do or not do. So that's really important. How do you strategize around that? What's the smart conversation you must be having as a bank around that?
No, absolutely. We think the Fed works best in its current format, independent and being overseen by Congress. We hope, that's how it continues after we get election results, hopefully in 2 weeks. But we do, again, tell clients to just, focus on, what the Fed is going to do. In terms of fiscal policy, that depends on what happens in the congressional elections. Mm-hmm. Once we know the results for that, then we can adjust our outlook. For now, we just tell clients to focus on Fed expectations, again, which is for 225 basis point cuts before the end of this year and about 425 basis point cuts next year.
Because we don't know the outcome of the election, are you not even sharpening your pencils at this point? Do you wait to do this analysis until we have the results of the election? Because one thing we do know is that these candidates want to spend, and they don't want to raise taxes on a wide scale. And some of the analysis that we've seen from the CBO, for example, show that a Trump presidency would end up costing just trillions of dollars. And there are concerns about where that money's going to come from.
Yeah, no, absolutely. So things like tariffs, that's going to be a tax on consumers. It's likely going to lead to higher inflation, especially if we get broader tariffs than what we got early on. But again, we tell consumers to just focus on things like what the Fed is going to do. And again, our view is that we're going to get to 25 basis point cuts before the end of this year.
All right. So Geeta Gopinath of the IMF, Deputy Managing Director, just talking with our Lisa Abramowitz, said U.S. economy is among the strongest of major economies. What are you seeing at your bank and what you are seeing with your team when you guys look at the economy? What kind of economy do you see, and where are the strengths? Where are there some weaknesses?
Yeah, we think it's a good economy. We think that growth has been strong so far this year. 2024 is actually shaping up to be very similar to 2023. 2023 was supposed to be the year of the recession, but we got 3% growth, GDP growth. That was recently revised
So
up.
what are you economists doing wrong that you all keep calling for a recession? What is it that you keep missing?
Yeah, we weren't calling for a recession last year. We're calling for...
Were you the year before? Because they've been calling for a recession for a while.
I mean, there will be a recession at some point, but we don't think it's going to be in the next 12 months. But 2024, again, is shaping up to be a very good year for the U.S. economy. The labor market is solid.
So good that we start to see inflation rear its ugly head again?
I mean, that's a risk, right? So I think if the Fed cuts rates more aggressively than what we're forecasting, we could see a reacceleration in inflation. If the geopolitical risks escalate further, the Red Sea crisis, if we see more disruptions there, that could lead to inflation in goods and higher inflation again, and that could make the Fed restart its hiking cycle. But overall, it's a good economy. Inflation is going down, the labor market is solid, consumer balance sheets are good. Upper income consumers.
But the unemployment rate has gone up a fair amount in the last few months. We've watched that trend. We know once it starts to go up, it can start to go up a lot.
That's a great point. It's gone up, but on a historical basis, it's still very low compared to where it was in 2020, for example, after the COVID recession. So it's a good labor market.
But the trend line is higher.
It's not as strong as it was in 2021 and 2022, but that was unsustainable. And talking about unsustainable, I also just want to get back to your point about the debt levels.
Yeah.
We think that it's unsustainable in the medium to long term. It's a good U.S. economy, so.
What is the medium to long term, and when it's unsustainable, what are the repercussions of that?
So you get what you call like a crowd analysis effect, right? So that's when higher Treasury yields crowd out private investment. Mm-hmm. So if the budget deficit continues to increase at an unsustainable pace, we could see higher long-term rates, which again could crowd out private investments, and which will lead to a slower-growing U.S. economy. So we think and we hope that the folks in Congress are able to fix that sooner than later.
An American voting public, like if you're going to have these major spending plans and you got to fund them somehow, right? You're going to crowd out eventually, especially in a higher rate environment. If we're paying the interest on the debt, we're not going to be able to do all these spending plans that everybody is kind of touting. I am curious because you're a part of a big publicly traded bank. We mentioned Huntington Bank shares. Bank has about a $22 billion market cap. It's up more than 20% year to date. We've talked a lot about the health of the banking sector. What do you glean from that side of the business in terms of lending and loans, what you are seeing, whether it's on the consumer side, the corporate side? What is that showing you?
Yeah, so we're headquartered in Columbus, Ohio. We're sprouted out of the Midwest, and we are a national bank, a growing bank. We're just expanding in 3 states, South Carolina, North Carolina, and Texas.
Right.
Top 20 bank in the U.S. And we're also the #1 SBA lender by volumes in the U.S. And we have been in this position for about 7 years. So we get a very unique view of the U.S. economy, particularly from small businesses. Most businesses are small businesses.
Right.
And what we're seeing is that performance has been pretty steady.
What does that mean, performance? What performance?
Like just margins have been pretty good for small businesses. Despite high interest rates and inflation, businesses are still performing very well. And they're looking forward to the rate cuts as that will be boosting activity over the next couple of years.
Any pockets of concern, areas of concern that you see?
Yeah, so I think a risk is a Fed misstep. If the Fed cuts rates too aggressively, we could get a reacceleration in inflation, and we could get the Fed restarting its hiking cycle. Also, the geopolitical risks. That's also an area of concern.
When you say geopolitical risks, I know you mentioned what's happening in the Middle East, or you mentioned more so what's happening when it comes to shipping.
Sure.
Yeah, that's certainly top of mind for you. What about the Middle East, though?
That is a concern. Like if that escalates, and if we see an increase in energy price.
These are risks. These are not necessarily areas of weakness in the U.S. economy at this point.
Yeah, exactly.
Any areas of weakness in the U.S. economy?
Housing. So activity has been weak in the housing sector. Looking at housing starts, housing permits, existing home sales data just came out yesterday. So that's a weak sector of the U.S. economy. Manufacturing also is still weak. But these are very rate-sensitive sectors. So lower interest rates should help boost activity in the sectors. And we expect activity to improve in these sectors as rate cuts advance. So, once the Fed gets more advanced in its rate cutting cycle,
right,
we should see a better manufacturing and housing sectors.
All right, good. Good check on the U.S. economy. So appreciate it. Olu Omodunbi, he is chief economist at Huntington Private Bank, right here on Bloomberg Businessweek.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, as you know, Bloomberg Businessweek has for years ranked the top business schools in the U.S. and around the world. And if you never want to miss a Bloomberg Businessweek story, become a subscriber today. Or ranking.
Right.
Because you'll unlock deep reporting and analysis from reporters all around the world, including unlimited access to Business Week. Check out our offers right now at Bloomberg.com/subscribe now.
All right, as we shared with you last month, Stanford University once again held down the top spot among full-time MBA programs at U.S. schools, as it has for the past 5 years. Business Week also looks at the top schools around the world. Number 3 in Europe this year is SDA Bocconi. I wanted to make sure I said it correctly. SDA Bocconi.
You can't go there unless you say it right.
That's why I'd like to go there, which ranks ahead of London Business School and INSEAD. We've got with us Stefano Caselli. He is Dean at SDA Bocconi, along with the person who makes it all happen in terms of the MBA rankings. We're talking about Dimitra Kessenides. She's Bloomberg News Senior Editor, both joining us here in our Bloomberg Interactive Brokers studio. Dimitra had a great question, and I'm just going to give you props and credit for you. What brings you to New York City?
Well,
you're a long way from home.
No, it's great. So because in New York, we have a lot of alumni. We have a fantastic chapter. I have a very long traditional relationship with the U.S. market. So many students, after, Bocconi program decided to move to United States. It's quite important to have alumni for fundraising, for placement. So it's quite important to stay here. So it's let me say, it's the most important place in the world. So it makes sense to stay here, right?
We're not going to fight you with that.
The most important place in the world.
But there is something about, tell us what makes your business school unique when you think about the placement within the world and attracting people from all over.
Let me say, is unique for the place in which we stay. So Milano is a unique platform in the European playground. And you have a campus which is fully sustainable, which is one of the reasons why some rankings are flying this moment. And the other aspect is related to the fact that SDA Bocconi is classified as a business school. So for statistics, you mentioned, we are a business school. But every time I pitch SDA Bocconi School of Management, what I pitch is a school of management. Because management is not just simply for business. Management is for all, for any kind of organization, for profit, not for profit, public admin. And today, in a world where geopolitics, connection, and interaction within different industries are becoming more and more relevant, that's, let me say, the side which is most attractive of my school.
I do wonder, Dean, about geographic competition. Because, we classify them as international business schools versus U.S. business schools. And certainly, INSEAD and London Business School are competition to you. But how much competition comes from schools based in the United States, given that, especially over the last few years, the U.S. economy has absolutely roared back, whereas Europe's has struggled?
Let me say, competition is great, not because I have to say, but competition is great to raise the bar of every business school. So we raise the bar thanks to competition. Today, let me say, what is happening is not just simply competition between European business school and US or within the European playground. Competition today is based on the capability to attract talent, and we have to showcase what is our unique selling proposition, why it makes sense to say Milano. And the other part of the story is to help students to find the right job. So all the business schools are struggling in, ensuring the best placement today is the key element. And so we have, let me say, to find the right way, the right chemistry to combine talent with placement, with the network in which we stay. And obviously, United schools have, let me say, the competitive advantage to stay in fantastic networks and to stay, in cities that are hubs to attract talent. That's quite important. So this is one of the reasons when I discuss with my friends and competitors in Europe, became a very relevant to network, let me say, in Europe, to work as a hub together, because the students are attracted not only by the brand name of the school, but, by the network, because the network made the placement for the students.
Makes sense.
So there's some of that that's going on with U.S. schools too, right? I think you were telling me, certainly the schools in the U.S. to some degree are competitors, but do you have relationships with several of the schools and programs that you've developed to open up opportunities for your students? Can you speak to that a little bit?
We have a very long story of relationship with the school. I mentioned that Bocconi has 53 agreements of exchange with the top U.S. university and business schools. So basically our students spend a semester in US and we host US students in Bocconi for one semester, which is a great on the two sides, because it's not only for the culture, the career and the content of our students, but also to create a sense of awareness of Bocconi within the US market. And you have also several joint program or double degree with US school. We have a World Bachelor in Business, which is a program we ran together with Marshall at US University of Southern California and Hong Kong University of Science and Technology. So one program, 3 degrees for students. So great impact. We have a double degree with Yale, the School of Management. So that's quite important, not only for the reputation of Bocconi, but also to give opportunity to students, because if they have 2 degrees or 3 degrees, they are eligible for 3 different job markets.
Right.
So that's quite important today.
Do you have to do that? Because I do wonder, we've had lots of conversations, right, about demands for MBAs. And we've had stories about maybe students aren't so interested in getting an MBA anymore. What are you seeing in terms of demand for degrees? Talk to us about admissions or people who are applying applications. Has that gone up?
If I consider the European playground, we need to have in mind that basically in Europe we have 2 layers. The layer number 1 is represented by Master of Sciences, and Master of Sciences are super large, so that means a lot of students, a lot of pressure on placement, and MBA represent in a certain sense the jewel of the crown that is on top of Master of Science. Let me say the demand coming from students is not stuck, is growing, because there is an ambition of top students, top talent to enter in a top business school and to find a great job. What is happening is for second-tier business school, I say with a lot of respect, is becoming very tough to stay in the market. It's a market for top business school, but if I consider top business school in Europe, the demand is not stuck, is growing. Obviously became more complex, more challenging for us, because we are, let me say, landing in a world where the placement is really one-to-one, is tailor-made. So if I want to attract talent, I have, let me say, to design the right career path for the talent. So it means a lot of energy.
Well, let's talk about that career path, because here in the U.S., different schools are known for having different specialties, or not specialties, but attracting a student who wants to do a certain thing. Stanford talks about entrepreneurship a lot, tech, Silicon Valley, just a DNA of that there. Here in New York, NYU and Columbia lead to a lot of finance jobs. You go there, and you have at Columbia, you have, the investing program, Graham Dodd, et cetera.
Or hosts of a show called Bloomberg Businessweek.
But what are you guys known for? I mean, if you go to Milan, what's the career path that you're known for? What do you attract?
Let me say, if I consider statistics, is just to simplify, but I'm not simplifying, is 1/3, 1/3, 1/3. It's 1/3 is the financial system, which is in the past was investment banking only, and today is a bit more complex because investment banking, asset managers, illiquid investment. We have to remember that in Europe, we have a massive amount of asset that need to be managed. So the presence of asset managers, of illiquid fund is there. So they are very attractive, let me say, for students. The other 1/3 is for consulting company and advisory, let me say, is an evergreen, but however, they continuously need the top talent because the demand of their customers is becoming more and more complex. And the other 1/3 is represented by corporates, typically large corporates, and we have some verticals. Let's think about the luxury system. It's quite attractive in Italy and France, and so is not obviously the most important, but if I consider corporate, obviously luxury system is a right combination between Milan, the tradition of, let me say, made in Italy, and the capabilities of Bocconi University. So, and then the mix is evolving within this 1/3, 1/3, and 1/3.
So like the LVMH, like luxury, they're going to the big LVMH, and those, I mean,
Kering.
Right.
And
Kering.
Obviously we have giants, but we have to consider that these giants in Europe basically support an ecosystem of SMEs that are jewels. Because if I consider, let me say, a luxury product is the outcome of a process which is the genius of the design, but it means a lot of quality of SMEs working within the network to sustain. So, and these companies, because they have to be compliant with the quality of the giant of luxury, they really need top students exiting from business school. So, and for us, it is an opportunity.
Dean Caselli, just one last question. Unfortunately, we're running out of time, just about 40 seconds. I am curious, though, are you seeing more students come in from other parts of the world, and in particular the United States? We've heard a lot of, as the cost of education in the U.S. has gone up, that you have U.S. students kind of looking outside the U.S. Are you seeing an increase?
I see an increase.
And just got about 30, 40 seconds.
Typically, if I consider my students, 1/3 come from Europe, France, Germany, 1/3 from Asia, where Asia means India and China, and 1/3 from North America. And the number of students coming from the East Coast is increasing for many reasons. And one of the reasons is the tuition fee, but not only, because thanks to rankings, many European business schools today are very visible, and rankings are a great proxy of the quality of what they can find.
Interesting stuff. Come back soon.
Thank you. Great pleasure.
Thank you.
Thank you. Stefano Caselli, he's the Dean of SDA Bocconi, and of course our Dimitra Kessenides, Senior Editor at Bloomberg News. Check out all our coverage when it comes to MBA schools and rankings. You can find that at Bloomberg.com/Businessweek. Thank you both. This is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. About 18 minutes left to go until we close up the markets on this Thursday, October 24th. Ring the closing bell. Charlie, of course, just talking about the numbers. A little bit higher in the S&P 500. NASDAQ 100 outperformance there and a little bit lower, down about 1/3% on the Dow Jones Industrial Average. Just feels like we're marking time a little bit.
All you got to know about
Got a lot of earnings
the
to
bell
come.
today, Deckers and Skechers.
Do you wear them?
Do not have, so Deckers makes Uggs. I don't have those.
Oh, they do.
Yeah.
Skechers?
I think Deckers does Hokas too.
All
Is
right.
that right? So yeah.
We
maybe-
digress. We
Okay,
digress.
we digress. Hey, let's drive to the close. We got with us Sevasti Balafas, CEO at GoalVest Advisory. It's a boutique wealth advisory firm. It serves high net worth clients. GoalVest has about $600 million in assets under management. You guys also launched this late stage VC fund.
Yes.
We're going to talk about that in just a few minutes, but I want to get an understanding from you about what you're hearing from clients right now, because a lot of people we talk to say there's a lot of kind of stresses out there.
There's stresses out there. There's a lot of election talk. We're less than 2 weeks away from the election. So certainly asking about the election, should I do anything? What should I do?
What are you telling them?
We've got you covered is what I'm telling them. We've done all the things that we were supposed to do already. We've asked about your cash needs. We've diversified your portfolio. We're positioned, whether it's Kamala Harris or Donald Trump that wins, we feel confident about what we have in clients' portfolios. The main thing is about diversification. So we've done that work already. So right now, we're not making any changes that are going to cause any unnecessary tax implications. We're staying the course with our diversified portfolios.
So in other words, you're saying business as usual. So you're not doing, whatever the outcome is, was there some kind of positioning you did ahead of the elections just to kind of put everybody in a certain position? Like, was there some changes you did make, and what were they?
So we did do rebalancing. We have made those changes. We have clients invested. We are doing rebalancing. Market, as you know, was up over 20% last year.
So
up
pulling
over
some out of
20%.
equities because of the run up.
Exactly. So we're rebalancing back to our target weight positions, but we're not making sudden changes. We are looking to diversify, though, even further. So out of stocks, you mentioned gold is up, stocks are up, Bitcoin is up. All the asset classes seem to be up this year. What we're looking at more so is in private markets, alternative investments. So looking a bit more on the alternative side.
Are you playing in crypto, Bitcoin at all?
No.
Are your clients?
Here or there they talk about it, but no, not really.
Yeah, I'm not surprised to hear you say that.
Yeah.
So private markets,
Yes.
dig a little bit deeper. I feel like we've gone out to milk in a couple of years, and it feels like that's all anybody ever wants to talk about is the private,
It's true.
private markets, and increasingly private credit, not necessarily private equity. So what specifically, what kind of exposure can you give your clients on that front, and what do you do?
Yeah, so we do have access to private credit, but we are more interested a little bit more in the private equity. We did launch a fund recently, but the main point on private equity and private markets that I like to talk about and remind people of is that the opportunity set is broader and wider on the private side. So in the 90s, there was about 8,000 public securities that were available.
I know.
Half of that number exists today. Companies are staying private longer, right? So we have to look at that exposure and diversify there as well. I think that's the big opportunity.
The challenge there, though, is what it does for your clients in terms of cash needs.
Yeah.
This is, and even with your VC fund, this is separate. The privates are separate from your VC fund, right?
Privates are part of the VC fund.
But the VC fund that you're
Late
launching
stage
is
private.
new,
Yes.
whereas the privates
Yes.
you've had given access to for years.
Yeah, we have access to different private markets for years. Yes, this is the late stage venture fund we recently launched is the new fund for us.
In that late stage venture fund, you have a goal of raising around $50 million.
That's
You're going to
exactly
invest in AI, SaaS, fintech,
That's
and the
right.
like. Who are you? How does this work when it comes to like a wealth advisory firm? How do you go out and sort of solicit money for this?
It's a lot of work, and I have a great team behind me that helps me do it. But first, there's on the deal sourcing side. So that's number one, deal sourcing. What companies do we want to look at? So that takes a lot of work, and there's a lot of ways we look at that. And it's a lot of communication, building out our network, and talking to people in the industry and hearing what's going on.
Why is this the right move rather than just investing with venture capitalists? So like you could, as a wealth advisory, you could say, okay, we're going to invest in, X fund from Sequoia or from Andreessen Horowitz. Like, you guys could do that.
It's really hard to do that, actually. If you're a $3, $4, $5 million client, to get an allocation that makes sense for your portfolio, it has been hard. Companies like mine are making it easier, but it has been very hard actually to get that access.
You could do a fund of funds.
There's some fund of funds out there. I'd say you don't get the same economics and return potential as a fund like ours.
There's another layer of management.
There's another layer of
that.
fees. There's fees upon fees. And what I've found is those funds end up getting overly diversified, and you end up getting the illiquidity without enough of the potential return. So our fund is a little bit different in that way. And I think, going back to something that you were asking earlier, illiquidity is a part of this. So if you're investing in this, you have to know your money is locked up. But our clients are investing for the long term. So we've already talked about cash. The clients that may need cash on a monthly basis or over the next 12 months, 18 months, we've taken care of that. This piece is longer term. They're not touching this part of their portfolio. So it absolutely makes sense to look at that broad array of opportunities.
So longer term, 3 to 5 years that they're locking up?
3 to 5 years, yeah.
And late stage VC, so is the expectation that it's either a company that goes public or more likely gets sold to somebody else?
M&A, some liquidity event. So it could be going public. It's, there's been obviously
it's
a
not
lull.
Been a really, yeah.
There's been a lull in the IPO market. So whether it be an IPO though, which we do see more sites of next year, even some of the companies that reported like Blackstone or KKR talking about that. So I think next year is going to be a bit better. But yeah, so it could be an M&A or IPO event, strategic acquisition.
Sevasti, why do this now?
It's a great time for it. As I go back and I talk about diversification, so stocks are hitting all-time highs, tech company stocks hitting all-time highs, all the asset classes are up. This is a good time to diversify a little bit and go into this market. Valuations are suppressed, but I think that's going to turn around. So if we want to buy low and sell high, this is a great time to be looking at these assets.
When you, who do you raise money from for this VC fund? Is it from existing clients and you just allocate some of their capital into it?
Yeah, some existing clients. We work also with other financial advisors. So we do have other financial advisors that use us for their investment management. So they're introducing it to their clients. That's been really exciting for them because clients are asking about it. How do I get access to Reddit before it goes IPO, or a number of the other names before they go IPO? And so we're giving other financial advisors something to talk about with their clients and something interesting to invest.
And I would assume it's accredited investors, or no?
It's accredited investors and qualified clients.
All right, interesting stuff. Thank you so much. Really appreciate it. Sevasti Balafas, she is CEO at GoalVest Advisory. They're a boutique wealth advisory firm serving the high net worth client world. They have about $600 million in assets under management.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.